Hey guys, I'm the Newb investor. Today we'll be looking at Amazon, but this time I'm gonna skip the intro and go straight to their financials because their numbers just don't make sense to me. I was told it was a growth stock, but then I saw a very high PE ratio for a company that makes a single digit profit margin. I was shocked. I honestly thought it was making like 20-30% profit margins. You know, a normal growth stock. Amazon is currently trading at 3065.87 with a high price of 3773.08. That's 707.21 from the highs, or 18%. Market cap of 1.56 trillion and PE ratio of 47.32. Earnings per share trailing 12 months is 64.82. EPS multiple relative to PE is 0.76. Current ratio is current asset divided by current liabilities. It is at 1.14. We want it greater than 1, so it's good. Long-term debt of 116.4 billion. Cash of 36.48 billion. And then negative free cash flow of 14.73 billion. Now, why is that? They've been spending a lot. In 2 years, they spent 101 billion in capex. So you might want to look at that. Price to sales ratio is 3.32, which is good. We want it low. This one shocked me because I know Amazon, but I have not seen their financials until now. Profit margin in 2021 is 7.1%. It is increasing though, and it is increasing at a very impressive rate, but it's still one one digit. Price to cash ratio is a bit high, and price to cash flow, free cash flow, is negative because they don't have free cash flow in 2021. But if we use 2020's free cash flow, which is 25.92 billion, the price to free cash flow ratio would still be high at 60.19. They could pay their debts though in 5-year period. Now, for their revenues, it is increasing steadily, almost 30% a year. That's very impressive. But in 2021, they only managed 22%. Down a bit, but still there's growth. Net income growth and EPS growth is above 50% in 2021. Very strong numbers. Now with COGS, on average, it is about 60%. In 2021, it's 58. Basically, still around the average. Their profit margin increased by 29% in 2021. Adding the average COGS and profit margin, it is about 65%. Also looking at this profit margin, guys, I would say personally, it's not very investor friendly at this rate. You're basically waiting for buyers to bet big on this stock as well. I don't think value investors would even touch this. I want this stock to I want this stock to either go down or trade sideways until their profit margins could catch up to the PE ratios investors are paying for. And then maybe there'd be buyers coming in. I am very bullish on Amazon long term. I bet this still be around for 10, 20 years from now. But guys, a single digit profit margin and it already trades at 40 plus PE, 50 PE. A lot of people are either hyped about this company or they're betting big on Amazon. Most of their revenue is from their online stores and third-party sellers, which has a very thin profit margin. Their biggest margins have decent competition. Their cloud could dominate the space, but I don't see them taking 60-70% of cloud market share. Them diversifying their revenue streams would just increase their COGS. I could see their profit margin reach 16, 18, maybe 20% in 5 years. But to a 30, that would mean they've taken down some decent competition. I'd love to bet on Amazon, but not at these prices. It's way too overvalued for me. I'd pay around 1400 per share. And that's a high price assumption with a high price PE assumption of 16. Now, why 16 only? I'm basing the 16 from the profit margin, guys. Profit margin in 2021 is 7.1. Doubling that is 14. I'd still be paying more than their profit margin. So